Hey there, everyone. Ryan Schul here. So, in the project today, I want to look at event-driven trading strategies. Okay, so these are events that come out in the news based on a certain ticker or a certain stock, which is the same thing. Ticker symbol is the representation of the stock on the stock exchange, and news that comes out about that company. And we're going to go ahead and determine, is the news positive, is it negative, or is it neutral? And based on a confluence of keywords and tickers and events that come out in the news, we're going to create a trading strategy and assign weightings to these different stocks and dump this into the portfolio based on the weightings and see what the investment allocation is, and then see what the investment performance is. So why would we even want to do this type of thing to begin with? Basically, to capitalize our market inefficiencies, to understand market behaviors better overall based on news, right, and events in the news, whatever is reported by the news, to generate alpha. Alpha is positive returns on your investments, diversify returns. Right, we want to create a diversified portfolio. We want to allocate our stocks into different investments, and thereby reduce the risk of investing in one concentrated area, just technology or consumer durables or something like that. We want to spread things around to eliminate most of the concentration risk. Okay, we want to backtest and validate trading hypotheses. I'm going to show you how to do that. Manage the risk. I alluded to that just a minute ago. Automate decision making and eliminate influential or what's it called, like personal investment decisions or emotional decisions. You want to eliminate the emotion from your decision making activities, from your investment decision making activities. Okay, don't fall in love with a stock, because I guarantee that stock will not love you. If you fall in love with Microsoft or Tesla or Meta or Amazon, that is not going to help you. And I guarantee you 100% mathematical certainty the stock is not going to love you back. So don't love the stock. Okay, and we're going to build event-driven products. Okay, so we're going to look at the components of this whole strategy. Use some data science, natural language processing techniques, an event detector, and trade logic, okay, to create a trading engine and trading system, and then an execution engine to go ahead and execute these trades as if it was done in real time. Now, this is always backwards looking. You can't go forward in time, right? But we're going to understand what happened in the past and use that to make intelligent, informed decisions into the future, so we can understand potentially what could happen next. Okay, so I have a list of tickers down here. So everything is put into a list, and of course this is dynamic, this is fungible, this is changeable. You can add whatever you want. Keywords here, again, totally changeable. This is what I came up with. By all means, put in whatever you want here. Okay, you need your API key. This comes from the news API client. Let me add a note down here. Actually put these at the bottom. I think I should start putting these at the top, because that's where we always start. We start at the beginning, we don't start at the end. Oh, I don't even have that. Okay, so that's interesting. I thought I had that, but I don't. So let me go ahead and find this just so you have a reference for that. This is news API client. Sorry about that. I thought I had that in there, but I actually did not. So let me see what this thing looks like, and I'll copy and paste the link. I mean, I think you can find it pretty easy, but let me just get it for you, save you a step. API key. Okay, that's what we want. So here's free news API. The thing I like about this is they can give you up to 100 news articles per stock ticker, and you'll combine that with the news event. Okay, so that's where you register for that, and go ahead and copy and paste that over there. So Yahoo Finance has free data as well. API. But they limit you to 10. So you only get 10 news articles per ticker. So how many do we have here? 3, 4, 5, 6. So they would give you about 60 news articles. Okay, so computer's frozen up again. God, this thing is like beyond annoying. Anyways, let me just focus on this thing. So you can get 10 free news articles from Yahoo Finance. I like this. I found this thing recently, like a couple of weeks ago, I think, and they give you, I think, 100 um, 100 news articles per request, right? So this would be one request, this would be 2, 3, 4, 5, 6. So we can get up to 600, and we're going to focus on these words, right? So we're going to take the ticker symbols and the keywords that we're looking for and create, we're going to go fetch this from this free source and create a corpus of text. A corpus is a body. We're going to create a corpus of text. Now, I can't run this because I don't have my API key. Mine is personal and confidential. It's assigned to me. You go get your own free one, copy and paste that in there, and it'll work. So I'm not going to run this in real time, but you can see when you do run it with your API key in there, you will get all these news articles, and it's a ton, guys. So if you look at all the stuff in here, and again, everything is mapped back to these tickers. So you have the 6 tickers: earnings, jobs, inflation, interest rates, Fed, that's the Federal Reserve, CPI is Consumer Price Index, and unemployment. Again, put in whatever you want to search for, you put that in there, and this is going to come back, right? So let's say we have our news articles. We can go down here and use some natural language processing techniques. I'm going to create a dictionary here. This is a key value pair. Here's the key on the left, and the value is on the right. Microsoft, Tesla is Tesla, and that guy, I don't even like to say his name. So whatever. Google, Amazon, and Google is Alphabet 2. I'm not even sure how that works. They have 2 companies with the same name, or 2 names for the same company. Not sure what Alphabet is, but somehow that rolls up into Google, I guess. So we have the stock tickers. I do understand that. We have the key events, right? I understand that. So we're going to go ahead and fetch that from these news articles, do a sentiment analysis, right? So we're going to tell the computer, go ahead and assign a label. Is this positive? Is this neutral? Or is this negative? Based on the sentiment or the feeling of the news article. Okay, so the nice thing is we can scan through hundreds and hundreds of news articles. As a person, if you have to do that, there could be some bias based on who's reading the news. Does this sound positive or negative? It could be very different for different people. But the machine is going to go ahead and scan through these hundreds and hundreds of articles, and in a non-biased way, it's going to assign a label of positive, neutral, or negative, okay? Everything is going to be standardized into a data frame, and when we get this, we can go ahead and look at the timestamp, because I want to know when this news article came out. So you can see the last time I ran this was actually today. Today is August 2nd, and it goes back a couple of weeks. So it goes back to July 17th. So we have about 2 weeks worth of data, 217 records here, and 4 columns. So the 4 columns is ticker, sentiment, title, and then the URL. We have the URL over here. So we have everything we need, right? So we have the ticker, sentiment, title, and then the news article where this came from. So this gets cut off a little bit. That's fine. We can find that thing over here. Google, and then there's not great matches. Okay, well, you know what? Let me see if I can actually fix this, because this is a little bit weird here. Because I do want the whole article displayed. Let me see. I'm gonna Google this real quick. Hang on. I do want the whole thing displayed because it's just a lot easier to see that. And I just realized it's getting truncated here with the ellipses. The ellipses is the 3 dots that you see at the end. So let me fix that before we move on here. So give me a minute, guys. That is. All right, give me a minute. Let me get this updated here. Yep, I know. Okay. Okay. You have to be very nice to this computer, very gentle, very grateful, because this thing is going to blow up. And it's not going to do anything that you ask it to do. ThinkPad T14, guys. T14. It used to be great. I, lately it's getting so slow. It's like uh, it's incomprehensible how slow this thing is. Let me just go over here. Let me just try that. The other screen is just totally dead here. Okay, so and is doesn't that show data? That might be the one. Okay. God, so that though. Max Rose. I don't think it's Max Rose, but I can try it. Let me see. I don't think so. But it's like a similar command, I think. Let me search for this again because I don't think that's going to work. This guy's got an interesting question. Let me see what he says. That's it, though. I don't think this is going to work. Yeah, there's a special. Oh, sorry, guys. I apologize. This is not me. This is a computer just going like retarded slow. I mean, like, sorry to use the word retarded. I mean, like, ridiculous slow. Like, I'm sorry. Can it actually work here? I mean, sorry, I tried to do a video earlier today. I had to delete the whole thing. The computer is going so slow. I couldn't even say the message I wanted to say. Like, this data science is a little bit complicated, but it's not that complicated. But you get on a slow machine and just nothing works, nothing happens, nothing gets done. Let me look at that again. There's like a special command here. And I don't memorize these things because I focus on solving. I'll admit, like, I don't memorize these things intentionally because I'd rather solve innovative problems that other people can't solve and, like, get things done that other people just get stuck on. So I intentionally don't memorize these things. I'm totally fine not memorizing, but then sometimes you get into a spot like this where you want to do something that's kind of simple and it just won't work. So well, I am resourceful and I am tenacious, so I'm not going to give up. If this computer refuses to work, that's fine. That is fine. That's the computer. That's not me. That's not me. Oh, that is not me, guys. That is not me. Uh, but I'm not going to give up. I'm not going to give up. If the computer doesn't do it, that's fine. I'm not going to give up, though. Not going to do it. I'm not going to do it. Let me ask Chat GPT. Maybe that thing isn't working. This other thing it's just not doing it. Okay, let me shut this down. Obviously, like this computer can just do one or two things. Um, and if you ask it to do three, it ain't gonna happen. So, I'm not going to give up. I'm not going to give up. That's it. That's it. Not going to give up. Okay. ThinkPad T14. T14. Sorry, T14. Oh, ThinkPad T14 for better or for worse. ThinkPad T14. I'm not giving up, guys. I'm not giving up. Not giving up. Okay, you can do whatever you want to do. I'm not giving up. I'm not gonna do it. I'm not gonna do it. I'm not gonna do it. This is the only thing on my channel right now. This is the only thing on my channel. Okay. This was a quick video, 10 minutes. Oh, that's fine. I'm not giving up. I'm not gonna do it. I'm not gonna do it. If the computer gives up, that's fine. If the internet gives up, that's fine. If Google gives up, that's fine. I'm not giving up. I'm not gonna give up, okay? So you can do whatever you want to do. I don't care. You get this thing over the goal line and start my day. I'm not giving up. So you can do whatever you want to do. I'm not going to give up. Not going to give up. Okay. That's fine. That's fine. That's good. That's good. Okay. If you want to give me a blue circle of death, that's fine. I'm not giving up. I'm not going to give up. Not giving up. Okay, I think something is moving. Something is good. Something's better than nothing. I'll take it. I'll take it. I'll take it. I'll take it. Let me see what ChatGPT has to say. Okay. Okay. There's something. And then this thing just randomly goes over there. There is no work anymore. It's 2025 now. It's August 2nd, 2025. There's no work. It's just solving problems. That's all you do. Solve problems. You don't work. I don't know anybody who goes to work. Okay, nothing's there. That's fine. That's fine. I don't care about that. That thing is barely working. It's limping along. That's not it. We've already established that. Let me get rid of that. Let me get rid of that. Let me get rid of that. Let me get rid of. Oh, maybe this is the one. Maybe that's it. I'm actually proud not to memorize these things because I would much rather use my brain to solve innovative or do innovation and solve problems rather than just memorize things. I could easily memorize all this stuff, but then I couldn't actually do anything. Okay, that's kind of what I was looking for. Okay, so it's better. Okay, so now I can get the news article. I think we're in business. It only took what 25 minutes just to do a search. Okay. Uh, okay. This all this stuff works, guys. On my machine is just like ridiculous slow, like ridiculous to the point where I can make a video. I can write the code and make a video in 1 hour, all in narrative. This is what I call the narrative. But the computer goes so slow it takes an entire day to do something that should take like an hour. And when I say a day, it's like probably close to 24 hours just to do this, which should take less than an hour. So, anyways, let's move forward. Despite the slow computer, trying to get to 365 videos in 365 days. This is like number 360. I think I've got 5 more to go with this. So let me just get over the finish line and then take a break. So you can see all the news articles. You see what we have here. We have the ticker, the sentiment, the title, the URL, and the timestamp. Okay, and in the with respect to time, I will move forward at a quicker pace. So we have 217 rows, 4 columns. These are the 4, right? The row is actually, the timestamp is actually the index. So this is like a unique identifier for all the rows here. This is kind of like a row counter sort of. So here's the index and we have 4 columns, right? So that's what we're looking at. And you have all the sentiment, the ticker, the title, and then the URL to get to the news. So over here we have buy, sell, and hold. If the sentiment is greater than 20%, then we buy. If it's less than negative 20%, we sell. Otherwise, we hold. So pretty basic logic. I'm not going to go ahead and refresh this and rerun it because I don't know what the computer is capable of. I know how these things should work. If I hit run, it could take 15 minutes. I don't know what this thing is doing. But we have ticker, sentiment, title, URL, and then the signal. So this is the investment signal, right? So we got the 4 from before, the previous logic, the previous step, ticker, sentiment, title, URL. Now we're introducing a buy, sell, or hold recommendation based on the sentiment score, right? So sentiment 0.10, hold. This is greater than 0.2, so that's going to be a buy over here. I see a couple holds. It's between negative 0.2 and positive 0.2, and this is 0.5, so that's positive and that's positive. So these are buys and holds. I don't see any negatives. So that's fine. If we have a negative, we get it. If we don't, we don't. So the overall event count, this is called aggregation. We aggregate everything to get a mean, and that's the average sentiment. So we're getting the mean of the sentiment and the event counts. So Microsoft has 68 news articles, Meta has 64, Apple has 40, Amazon 33, Tesla 5, and Google, Tesla has 7, Google only has 5. So Microsoft has a lot more news content. The overall sentiment is about 12%, so kind of close to positive, not actually positive because we're looking for 0.2 or greater. So this, and this is the highest sentiment, so these have lower sentiment. Well, that one is kind of high too, okay? I think we are doing descending by event count. We could set that by average sentiment. Going out on a limb here, I don't even know if I should do this. Should I do this? Is the computer going to take 15 hours to run the process? Okay, so this is descending order by average sentiment. So Google here is a little bit more positive, but it only has 5 news articles associated with it. I'm going to go back to what I had before, kind of like that. So event count, just because we're sorting in descending order by number of news articles. We have 68 here. Here we only have 5. So the sentiment is higher, right? 0.20 and greater is considered positive. This is only 12, so this is neutral. So either or, I mean, take your pick. Do you want to sort it by event count or by average sentiment? Doesn't really make a huge difference. So this is the buy, hold, sell plotting by counts. So we have 3 holds, 2 buys. Okay, here we have 4 buys, 3. Wait, what was it? Neutral. 4 holds, 2 buys. Microsoft has a bunch, right? That's the biggest. So hold 50. Buy is 17, and sell just has 1. And over here, I think this is going to be 1. This is 1 for this. Almost froze again. Okay. 1 sell for Meta, 14 buys, and then 49 holds. Okay. So going down here, we have all the trade logic. So this is the cost at that point in time to buy this number of shares. We could buy 16 of Tesla at 302. 16 times 302 is 48, 42 and 8 cents. We buy 19 of Microsoft at 524. So total is 4,716, and so on and so forth. So these are all the buy recommendations or sell. We have a couple sells of Apple down here. These are the proceeds down here for selling, and a couple sells and a couple more buys. So the portfolio value is 100,000. Final positions: Apple 40, Microsoft, Google, Amazon, Meta, and Tesla. You can see the investment allocation down here. So we're going to test if the investment threshold is greater than or less than 0.2. If greater than 0.2, then we buy. If less than 0.2, then we sell. So that's what this is doing. So the threshold right here is represented, and we see the buys and the sells, and then the actions over here on the right. To optimize the allocation, we are going to look at the value counts. We have the total buy counts, total sell counts, and then all tickers down here. And this is actually not displayed. Let me display this thing. Signal. It's looking for a signal. Okay, so I think I have to run this all in order. I have to go back over here. This should be fine. That is fine. I think something got lost in memory. Color equals signal. Okay, let me look at this. DF events. Why would it not? I don't get it. Okay. It works yesterday and it doesn't work today. I don't get it. Okay, so they have the counts over here. It's not loaded in memory, I guess. I don't know. I mean, I don't know if my machine just has some problem with Alzheimer's or what, but it seems to forget a lot of things over time, which I don't really understand. Anyways, here's the buy, sell, the overall score, the weights, and then the allocation. So we're trading with $100,000. That is the assumption here. Let's see if I can find that. Okay, yes. So here's the weight. So the assumed value of the portfolio is 100,000. You can make this whatever you want. If you want to make this 1 million, you can do it like this. It looks a little funky when you have these underscores over there, but it's actually easier to read. There's 2 ways to do that. You can do that where you have 300,000 allocated there, 300,000. These almost have the same weights. Actually, they do have the same weights. This has slightly less weight: Tesla, Amazon, Google. So you can understand, pretty straightforward, right? You would put most of your investment into Microsoft and Apple. It's actually evenly allocated, and that comes from the buy sell score. So you have 70 buys, 1 sell for both of these. Just haphazard, just random. That's the way that it came out with the sentiment analysis that was done before. Here we have slightly fewer buys and same number of sells. That's why less is allocated to Meta. Now we have 3 buys, 0 sells. So a little bit positive, but this is way more positive. So you have a bigger allocation. Here you have 3, so same allocation, 0.05, so 5% of the portfolio. Here you have 2 articles from Google, or that mention Google, that have a positive sentiment, no sells. The score is 2.0, and we allocate 3% of the portfolio. And like I was saying before, you can represent the $1 million like this or like this. I think this is just slightly easier to read. You cannot put a comma in between, right? If you try to put a comma like that, it's going to blow up, okay? It doesn't like that. But if you put the underscore, it's actually easier to read, and it works, okay? So we are going to go ahead and pull in historical time series data from Yahoo Finance. I'll go with the same 1 million. It doesn't matter what you invest here. It can be 200,000. It's whatever you want to invest, 250, 100,000, whatever you have, right? These things are dynamic, and the time period that you pick is dynamic too. So you would have to input this, you have to input this. Everything else is just going to flow for you, okay? So you have the weights from this step over here. So you know 30% of the portfolio is going to Microsoft, 30% to Apple. So it's 60% right there. Another 24% to Meta. So what is that? 84%. This is about 90%, this is 95, and you round off at about 99%, right? This, you round up a little bit there. And you have the 1 million that you invest. It goes into these 6 stocks based on this weighting, okay? And we're going to compare everything to the historical performance of the S&P 500 for the same time frame, right? So we're going back to 2024. So January 1st, the market is closed, but your investment or your trades will be executed on the 2nd. So January 2nd, the money gets dumped into the portfolio based on these weights that you choose right here, okay? And the overall return is about 41%. The annualized is the same because we're returning for 1 year, right? If I put in a different time period, like 12/06. So for the first half of 2024, I think it doesn't like this date, right? Because it's on 6/30. Okay. I thought maybe it would just do it anyways, but I guess not. It looks for that exact date. So the annualized return here is 53% because we don't look at 1 year, we look at half a year. But for that time period that we're looking at, the 24 months, the 6 months, for the first half of 2024 is 23%. Maximum drawdown is about 9.27%. Probably happens over here. That's the maximum drawdown. So we're looking for the maximum dip. But this strategy outperforms the S&P 500, right? So the S&P 500 has about 15% return. This has about 23%, 123. You can see that's the ending value divided by 100 minus 1. That's how we get the 23%. And the annualized is 53%. So like I said, you would have to choose the time period that you want to work with here. If I do 2023, Control Enter, the returns can be slightly different now because it's a different time period. So this strategy still outperforms the S&P 500, 93%, so almost 100% return on your investment in 1 year. Not bad, guys. It's not a bad return at all. Maximum drawdown is about 11.4%. Probably happens right over here. I could add more colors to the chart, like where exactly does the maximum drawdown occur. I didn't actually do that. I didn't think about that until now. But it doesn't always. The strategy doesn't always outperform the S&P 500. Really, it depends when you're invested in the market. Here, we actually lost 40%. So if you're invested in all of 2022, you lost 40% with this strategy. The very next year, 2023, you make 94% or 97, whatever that thing was that we just saw. And here, the S&P 500 does outperform the strategy that we picked. This is the event-driven strategy based on news sentiment. But if I go back another year, I think this will outperform. I think 2021 was a good year. Let me see what we get here. Yes. So the strat wins 41%, 141 right there. S&P is about 29%, so slight outperformance. 2020 was a good year. That was COVID. COVID was, you know what that was. And you know my opinion on that. I don't think I need to talk about COVID anymore. So that's 88% return, and the S&P was about 14%. So in most years, in most scenarios, the strategy does outperform the S&P 500, sometimes by a small margin, sometimes by a pretty wide margin. But again, guys, this is not investment advice. This is not my recommendation to you. I'm showing you the statistics, the mathematics, the finance, the data science, the analytics of how this works. Okay, I'm not saying that you have to invest in this. This is not investment advice. It's not a recommendation. I'm just showing you the fundamentals of how this stuff works in the real world. Okay, that's what this is. So don't get angry if you invest and lose money. Don't try to sue me. I have no money, by the way. If you want to, you get nothing. I have this channel that I've been doing for almost exactly 1 year. I'm almost at 1 year anniversary. Made zero on the channel, right? I'm going to have to go back to corporate America. I thought the channel would be successful. I thought, okay, I'm going to, I'm setting on a gold mine here. I'm going to just do YouTube for the rest of my life. Made zero, not even a penny on this thing. So I have to dust off my resume and head back into the corporate space, I guess. Not too thrilled about that, but whatever. I mean, my skills should transfer pretty effortlessly in many different ways. So that's it. Event-driven trading strategies. This is how you can outperform the S&P 500 in most scenarios, not every single one. I think 2022 was the one year that we saw that the S&P outperformed the strategy, but for the most part, I think like we saw 80% of the time the strategy beats the S&P, which is very interesting. I think I looked at several strategies and I recorded all my thoughts on the channel. You can see it's kind of scattered around. You'd have to search a little bit for it. Look for finance investing. I don't even know what the titles are, and there's so many of them now. I even get confused. There's so many now. So I have 360 videos at this point. This is number 360 exactly, I think. And there's just a lot of stuff on my channel and a lot on YouTube. If you look around, look at other channels by all means. Like, I'm not saying like mine is the best or just focus on mine. Look at the other ones out there, and you can learn a ton. You can learn a ton about investment philosophy, different trading strategies. There's so much information out there. There's no excuse not to learn. Okay. So, anyways, I'm going to wrap it up here. This is event-driven trading strategies. I think I already saved the notebook. Let me see if I save it again, I'll just get overwritten. So I'll share all this code with you guys, and I'll upload that when I upload the video. I'll drop the video a little bit later today, and you'll have everything you need. You have the whole narrative. This is what I'm recording right now. You'll have the whole video. Sorry, that's the same thing. You'll have all the code, and you have everything you need. Copy paste it into your own Jupyter notebook, run it, and enjoy. Let me know your thoughts, your comments down below. I'm going to wrap it up here, and I will see you in the next video when I post that, and that's going to be very soon. So keep an eye out for that. Thanks, guys. Take care. Bye.